Good evening, everybody. Welcome back to our live chart analyzing session. I hope that where you guys are is uh, the weather is well tonight. Over here in Michigan, we have quite a winter storm. And for those who are joining us for the first time tonight, I host these sessions every Tuesday and Thursday evening at 10 p.m. roughly, and that's the schedule I'm going to plan to keep from now on. So please join me every Tuesday and Thursday as we take a look at what has happened in the stock market. Also look at charts for opportunities that may present themselves. I welcome any questions to anyone who is from anyone who is watching. So let's begin. All right. So, like how I always like to begin, I like to look at a heat map of what has happened today. It gives us a rough idea of what has happened in the market. Quick glance of if the market was overall down for the day or if it was over green. In comparison, Tuesday, we saw all of this being all these sectors right here being green, and these sectors right here being red. So quite the opposite today. So today we have energy green, consumer staples, utilities, a little bit of real estate, right? All that is green and everything else is red, right? So everything that's red is financials, healthcare, communication service, information technology, consumer discretionary, industrials, right? Now, I usually don't day trade, so I don't keep myself in the market to really know too much of what has happened. So this heat map helps me get a quick peek at what has happened throughout the day without having any judgment, too much judgment, right? At a quick glance, it tells me um, the overall outlook of what has happened, right? So you can see we have one green stock here. We could probably take a look at it, right? This is Cisco, right? The odd little ones that are green, Cisco, Discovery, right? Lockheed Martin. This is a defensive stock, so it's green. Usually this and BA are green together, but only one of them is green or sort of greenish, right? It's sort of flat today, but it really means that something must be up with that stock, right? All right, so let's dive right into the charts, and we'll look right into at SPY to open, and so you can see here on this chart, this is the daily that I have up, and we're still in between. Price is still in between the 50 and the 200. It's a little below the 200 actually, right? But we came right back to see if we can hold some support at the 200. So you see this right here. We closed the day below the 200 today, which tomorrow I want to see what we do, if we're going to hold above it or if we're going to continue to the downside. If we continue to the downside, we will probably test this support here at 430 tomorrow. But if we hold this, we might come back up and maybe test this high right here at 445, it seems, right? 445. And the thing to point out is we have this formation here where we have these two lower highs or higher lows, right? Higher lows. And we have these lower highs here, right? So it's forming this kind of pattern, right? And I pointed this out, this pendant shape, where when once this shape gets the price will get tighter and tighter, and it'll go up and down even tighter like right in around here, and it'll pick one side to break out from, right? It's either gonna go from the upside or the downside, right? So price is probably gonna hug around this level, right? This level right here. We're looking right around the 440 mark, right? So prices, you see, you know, the last few days, prices just been going a little bit above and below 440, right? And it's gonna hold tight to this until one side breaks, right? And given that we are below the 50, right, I don't have any reasons to think that we're gonna break above and go to continue to the upside, right? We are holding at the 200, and 200 usually is a really strong support. But when it does break, it could signal a short-term trend change. So we've got to be aware, right? I mean, we could probably go as far down as maybe 400, 375, maybe even 350, right? But we have to keep an lookout. And it's not going to happen all overnight, right? We're going to have these bouncing downs, right? So if you are on the side right now, my recommendation is to continue staying on the side, because right now we're in between two moving averages. And when price is in between two moving averages, you're going to have this chop fest where uh, you're going to think that it's going to go to the upside and then it's going to drop out of nowhere. And you're going to think that it's going to go to the downside and it's going to bounce back up. Hey, Chai, thank you for joining me. Thank you. Yep, hustling every day. All right. So let's dive down to the hourly. The hourly will give us a better look at the market, right? So I mentioned this in my past sessions that this is one thing I look for when I decide if I'm going to be long or short, or which side I'm taking, right? Usually I look for the moving average cross, and we for sure see that cross here. So it crossed all the way back here and on the 11th, right? The 50 moving average, this purple line, crossed below the 200, right? And what that signals to us is the interim price action, right, is very bearish, right? Because it's taking the lower moving average, which is the 50, and it's moving way below the 200, right? A longer time moving average. And when we do that, price trends down, right? So when the moving averages are, the 50 is below the 200, I look for bearish position, puts, look for shorting opportunities, and my shorting opportunities is as close to this 50 as possible. So see, this whole area would have been a good opportunity, right? So today, this little bounce is aftermarket bounce, but if we open close to here or a little bit above it, it would present an opportunity to short. But what I mentioned earlier was that we are in between, on the higher time frame, the daily, we are in between two moving averages, and this is where it's showing this, right? Between two moving averages. Let me see. Let's go to 90 days, right? Between two moving averages, price would chop like this, right? So the last 2 weeks, a few days, price has just been going above, right? And it's giving you these mixed signals where you're seeing the 50 move above the 200 for a little bit, and then it comes below. And when you see this flip-flopping back and forth, right, there's no trend to the market. And when there's no trend to the market, you're bound to be wrong when you try to pick a side, right? So when the market is like this is when you have to take a step back. If you're a long-term investor, right, someone who focuses on long-term trading or long-term investments, you need to take a step back. But if you know how to and can handle shorter-term swings, meaning maybe a day at most, 2 days, if you're really pushing it, heck, even better if a few hours, right? A trade that lasts a few hours, you get a few dollars out of it. This is the environment that you really shine in. right? Because you can see here, a lot of volatility in a day, right? The move all happens in a day here, right? They level out, and then the next day they do the opposite, right? So you see these little, these darker colored bars here. These represent a day, right? You have some days where it's flat, but most of the move on the days where it really trends, you're really paying off. Like to this day right here on the 11th. Oh, yeah, on the 11th here, right? It went from 450 all the way down to 440, right? That's a $10 drop. So you keep an eye out for these kind of movements, right? So shorter term trade. Not saying that you can't take anything as a long-term trader in moments like this, but you're probably going to have to wait out a little bit more, be a little bit more patient, right? You're not going to see the move until maybe a few months down the line, completely move out, right? So times like this, if you're a long-term trader and you aren't already in a position that has profit or are taking a bet at something, it's best if you stay out because it's going to chop up and down. You're going to be happy one day and then sad the next. Right? So we're going to move to Apple, and feel free to stop me if you guys have any stocks that you want me to analyze the chart on. We can for sure just look at stuff outside of my normal core that I look at. But I'll continue. So if you guys have anything, feel free to stop me. So Apple still holding, actually close the day below its 50, but it could bounce tomorrow. But with this, we see this kind of weakness, right? We haven't formed a new high in some time, right? Still this pendant shape here, right? We haven't formed a new high in quite some time, right? The last high we formed was all-time highs here, right? All-time high here. And we haven't formed new high. We haven't even gone back and attempted to break it, right? So the kind of behavior that we're seeing it forming lower highs, higher lows, right? So that confirms the pendant. This pendant, it's getting close to picking a true move, right? If it's near to the downside or to the upside, with everything that is coming up this year, I think it might be more towards the downside, right? Even though I like to be long only, I still see it as being a market where we're not going to see much gains at all. I think January was probably the most gains that we're going to see for a while. Right? Q1 is already getting pretty close to over, right? In April, Q1 will be over. So I don't see us coming back to test these highs anytime soon. Right? We're seeing weakness forming here, right? This right here is weakness. We haven't touched any of the previous highs, and we keep testing that support at 50. The chart still looks great, but it needs to show that it can hold above the 50, right? So we have it a few times in the past, right? Namely here, that they did peak below the 50, but was able to keep the market going, right? Keep it up, and the stock kept running. So we could still hope for that, but it's very unlikely. Right? That's just my thinking. Right? But I do hope that I am wrong. You can see here on the down, we're moving down to the hourly, and price is just back and forth. Right? We see this move where the price is just below, the moving average is just below, goes below the 200, then it goes above it, and it keeps going this back and forth, whiplashing. Right? So times like this, it's not exciting at all. But a time like this, it does present some opportunities, right? And you could take the opportunities every single day as they come, because you can see here has some pretty crazy days, or you can sit on some cash and continue looking at opportunities as they approach, right? The lower they go, the more, if you have more cash on hand, you're basically going to be ready for when it does bottom out, right? And unfortunately, we never know where bottom is. So when bottom does, when it does get to a point where we like to consider buying, slowly buy, right? There's no rush to it, because a bear market, or the start of a bear market, is very slow at the beginning. We're not going to see the big heavy drops that we've been used to, right? I don't believe we're going into a crash, but if we do go into a bear market where the rate of return is going to be flat to negative, it's going to be a gradual drop. Be on the lookout for that. So Apple's still holding in there, but weakness. I sense weakness. And it's still looking good. Still a little bit below, just a little bit below the 50. It could pull back up, but it's gonna just be like what we've seen so far, right? A little bit up, a little bit down, chopping back and forth. Okay. Looking at AMD, right? AMD, you see, went back to that support, a little below it too, right? Below the 200. Being below the 200 is a bad sign, because we never want price to be below the 200. The 200 is a major support area. So price being below a major support area is a signal of trend changing, right? Trend changing. And what do I mean by this? So we look back at the last 2-3 years, right? Started in 2020, right? We zoom out. We look at 2020, right? Starting 2020, right? Overall, an uptrend, right? You see that very few times they touched the 200. These were, if you were able to um, buy in and hold it out, it did make it through, right? We haven't faced anything like we are facing this year, right? A lot of interest rates that are going to be coming, right? Interest rates increase. They're predicting three at a minimum, meaning we could probably get more to battle high inflation. We had the feds who've been buying stocks for the last like 2 years, and they're gonna leave the market, right? So you can see all this growth was from them helping buy us out, buy and keep us out of too much trouble during COVID times, right? So even then, right, we did see bounces at 200, and it peaked below 200 here, but it wasn't too much in comparison to here, right? So being below the 200, this is where I like to take my first stab at buying a position, right? And like I mentioned earlier, when it's below the 200, right, you think it's sort of bottom out. You open your initial investment or initial position, right? Not your full size. You open a little bit of it up if you're long term, and you keep adding to it. So if it goes a little bit lower, that just means you, for the same amount of money, you can buy more, right? And this only works on big, solid companies with good earnings, right? You don't want to do this on penny stocks, on uh, most of mid-sized companies. You don't want to do that, right? You want to do on solid blue chips or solid large cap companies that are producing money when they do this, right? They come down. You want to slowly buy into them and slowly add in. Even though it hurts on the way down, we never know where bottom is, and we can average down eventually they'll bottom out, they'll come back up, right? The chart long term, they're still money producers, right? A key word there, they are producers, meaning they're not cash negative, they're cash positive. They're producing income every earnings. It's a positive cash flow for them, right? So at the 200, if it breaks, we could see a little bit, we could see it die more, right? Keep an eye out for that. We dived out to the hourly. AMD, you can see 50 under the 200, right? And it didn't really stay above the 200 for too long, right? We only had about a week and a half that we were above the 200, and then we just kept going down more. So my thinking is this trend right here could continue, right? This was just our breather. This right here was just our breather, meaning some shorts, maybe they took profit. And we hit this top right here, right? Or this top right here, right? So price came up a little bit and didn't come back the full amount. And maybe this is the leg continuing down, right? And you can see here, let me remove this. You can see here, the initial drop had the same thing happen, right? Initial drop, we had where price went back up, and then it went down, and then went back up, tested 200, and I kept doing that, right? Until we took a long breather here, right? So you can see this happening here, right? We went to test the 200, didn't break above the 200, and now we're coming back down. So if it gets close to that 50 right here, maybe consider a short position if you're a short-term trader, right? If you're a long-term investor, could be an opportunity for you to buy. AMD is a solid stock, right? And I believe it was yesterday they closed the deal on their merger with Zion. It was yesterday or the day before. I don't remember if I talked about it on Tuesday, but they closed they closed the deal on the Zion merger. So no more Zion. Zion was XLNX, right? No more. The stock is no more, and it's all AMD now. So if you were holding shares of Zion, there you now have shares of AMD. But you can see it's starting another leg down. So this leg down, right? Daily looks pretty ugly, but after a long run like this, it's slowing down. It's not a bad thing, right? It allows you to pick it up. And when I see price like this, closer to 200 or below the 200, I like to look at the 50, right? And this gives me, well, not the 50, the weekly, because this gives me an idea of where price can be, right? Let me change the drawing set so we don't have so many scribbles. This name blank. It's nothing. Okay, so I like to start looking at the weekly, because this 50 weekly, right? This is the 50 weekly here, coincides with the 200 daily. And when price is nearest 50, this is my favorite area, because this means that because I am long only, this is where I like to start picking up shares, right? So as I mentioned before, if I am interested in 100 shares, I break it down, right? Yeah, I'm breaking it down into 4 sets of 25, or I break it into 10 sets of 10, right? So both have their flaws. If I break it down into 4 sets of 25, right, I may take a bigger hit when as price continues to fall, right? But if price happens to bounce like here, 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 and here, the 25 shares allow me to get more on the upside, right? That means I'm averaging down, but then as it goes up, I'm still averaging it, right? I get my full position of 100 shares that I want, right? But the con is I take a bigger hit, right? So for this one, breaking it down to 10 cents a 10, because we don't know if this is true bottom, right? It could linger on like this right here. It allows me to gradually get in, and my cost average will be closer to what true market price is, right? And it will let me stay in the position a lot longer without suffering so much of the pain, right? So as because we can see, this has been a great run for AMD. This is looking at the weekly chart. We've been running since 2016, right? Basically 2016 here, we've been on the run. It's a great, great, great 6 years, right? Great 6 years. So if it takes a breather and it goes to its 70s, right? 70s here, where it tests the weekly 200. It's still a great pickup. If I'm doing four sets of 25, that first 25 shares is gonna feel the pain, right? The second 25 shares, it's not gonna hurt as much. Third, it's probably not gonna feel anything, and then the fourth, we're probably gonna wait for it to bounce, right? So the play out is like this, right? So the first 25, you buy it here. Maybe a few months later, you buy another 25 here, right? And then you keep doing that all the way until you have your whole position, right? But if you're doing a 10, right? A set of 10, right? A set of 10, and we're doing this, right? So we average it out, 10 all the way to basically infinity, right? 10 times. So you're buying 10 here. So you're not seeing so much of a drop. So because it could go all the way down to 170, right? That brings it all the way to 2020 prices, right? We basically wipe out 2 years of gains. And that could be very possible because the average bull market lasts anywhere between 8 not even 8, probably anywhere between like around 8, 9, 10 months to about 2 years, right? The average bull market, average bear market, I mean, lasts that long. So averaging in allows you to stay in, but that's if you are a long-term player. This is not something that you're gonna make money on overnight. If you are a shorter-term trader, stick with the hourly. Times like this, it's chopping back and forth, right? It's chopping back and forth. You can see this drop here, right? All in a day, it went from 27 to about 113, 112, right? That's a crazy drop. If you missed that, that was a great day, right? So you got to be in quick, right? So that's AMD. Now, let's also look at Nvidia. Nvidia been a beast these last 2 years. So as it's falling, I say get your wallet ready for those who are on the sideline who missed this run, right? Or you got into this run late. This could be your opportunity to get it, right? So we look at let's make this big, right? We look at let's look at the daily, right? So the daily, it's not quite at its 200 yet, but it's still forming this pendant, right? This pendant shape. So price is getting tighter. It's holding. So if anything, tomorrow and Monday or Tuesday, we're probably going to still be in here. Very small. But be on the lookout because as we are closing in, we're going to pick a side, right? So I keep calling when price being in between the 50 and the 200, the danger zone, because it chops back and forth. You can see it's just this little tight range here. And when it stays in this range here, it's a day trader, intraday trader's paradise. You can see how big this range is, right? Let me erase this 15 to 200. I said it enough times. I'm pretty sure you guys are caught on. I mean, this is the danger zone. So around 2:30, right? Around 2:30 to about 260, right? That's a $30 range. And if you're seeing a day with where the price of a stock goes up $30 and you're not catching a few dollars of that, or even half of that move, right? Meaning $15 to the upside or $15 to the downside, then day trading might not be for you. Because you're not seeing how much you're missing out on the intraday, right? So that's what it's looking like on the daily. Tomorrow, pay close attention to 240, right? 240, because it's been the support here. You see it? We draw a straight line right here. 240 has been uh, the support since 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. So about a week and a half. So it's been the support for a week and a half. So 240 breaks tomorrow, we're gonna go down, and we're gonna go down hard. Right? If 240 holds, doesn't mean we're gonna go up a little bit, but we're still in that pendant shape, right? 240 holds tomorrow, we're still in that pendant shape, right? So we're gonna be in here tight, tight, tight. AMD, AMD, AMD tomorrow. AMD is advanced micron, right? Or AMD is going to be pretty advanced micro device, right? AMD. So it's pretty bearish right now. It's below the 200, right? So pretty bearish tonight, right now, and it broke the support. So tomorrow, see if it holds. I mean, I don't have too much hope that it will hold, but I mean, anything can happen. This is a crazy market. It's very, very fragile. Meaning any piece of any little news just becomes a catalyst. Right? Troops falling out could be a catalyst. And you can see it going up for a few days. Right? So back to AMD, right? Not AMD, Nvidia. So we're still in the semiconductors, right? And you can see price is just above and below, above and below. I'm not sure what this means. Right, price is just above and below, but you can see here, right? If you're just looking at the hourly of Nvidia, it basically means nothing based off just the technicals that I use, right? The 15 to 200, basically all noise right now. We don't have a correct size yet, but because we're not pushing any higher and we're not pushing any lower yet, your thinking should be, where was the longer term going? Where was the before that? What was the bigger move? And if you zoom out, you can see the bigger move was right here, right? So as it stays right here, right, we can even say this is a giant bear flag, right? A bear flag looks like this. It looks like a little L, right? Price was on the downside, and then it goes up for a little breather, right? So at the end of the bear flag is another huge drop, right, to the downside. That's usually, it's not always the case, but usually it is. So we want to be very careful because it's getting tight, right? 240, you can see here, we draw a line right here, right? And every time price comes to 240, it did peak below here a little bit, but it came right back up. And this was aftermarket. So not too much significance because it came right back up at here, right? But every time it goes to 240, it keeps bouncing. But look at this. We're not forming new highs. We're coming to test these resistance and we're getting rejected. So if one of these breaks, right, we need a 260. This is roughly 265, right? 265 or 240. One of them breaks. Right now we're at 240. We're close at 240. 240 breaks tomorrow. It's gonna be the leg down, right? It's gonna be a continuation to the downside for AMD. Oh, not AMD, Nvidia, right? So be on the lookout for that. And also tomorrow is Friday, meaning you could be stuck with a really long position that you open tomorrow. And with this fragile of a market, it could take off on you one way or the other, right? Pendant shape is not bearish or bullish. Pendant shape is a neutral play because it could take the upside or it can take the downside like this, right? Depending on which of the side breaks. And right now we're at the bottom of the support. So statistically, right, the downside is better to play. But if we were testing the resistance here, it would have been more favorable to go to the upside. But we're testing the bottom here, right? Okay. Now let's take a look at Amazon. Now, Amazon, and this is the range that I've been playing for the last year and a half. Now it's still holding it, right? You can see here, this is a giant range from 3,000 to 3,500, right? $500 range. You can see here multiple times that it tests the bottom of the range, right? And it bled through here, and it bled through here too, giant bleed here. But it held and eventually went back and test this, right? So you have to be patient with this because it's not going to be an overnight thing. Because this here, right? This move here took about 4 months. 4 months, right? $500 in 4 months. This move here was a little shorter, right? So every time here was an opportunity to the upside, right? You see here, so multiple times to play this, and with my favorite thing to do with when I see this a range like this, and as it gets close to the bottom, right? Which maybe we have a leg up here, or maybe it goes like this, right? Is to get some credit puts, meaning you're getting a credit, you receive some credit, and basically you're just waiting out to see if price will hold, right? And where I like to play, right? And credit puts for beginners, I do not recommend because there is significant loss to it, but the payout, usually it has about 80 to 90% winning rate, but the 20 to 10% times that you do lose, you lose a lot, right? So credit put, you get a put, it was something down here, something way outside of the range here, and per set of contract, you probably get anywhere between $500 to maybe $1,000 of premium, right, per contract, right? And then you just hold it. So these sets of contracts, it's just going off your buying power, and if as long as it stays below, as long as price stays above this range here, right, around above your two strikes here, you're winning. So you can hold it for the next 6 months, or you can have it set for the next month, or every week you can do it. And as long as price stays below here, you're collecting $500 to $1,000 depending on when you put those contracts on, per week, right? So for a little more advanced play for people, and so stock being in range bound like this, could be a good opportunity. You just have to learn how to make use of it. So we see this range here, and it's still holding true, right? Still holding true. And when it's range bounds like this, if we dive down lower to the hourly, it's going to be complete trash to us. because price isn't trending one way or the other. So it's just gonna look. You're not gonna know what to think, right? If you have the pockets for it, you can probably play it, right? Because AMD, Amazon is a really expensive stock. A lot of movement, right? You have a $20-$30 drop every other day, right? You can see here, price hasn't done much. It hasn't been trending any which direction. Right? We zoom out on this, you can see, we don't see any trends. We see a small little trend, a few days, at a few weeks here. But overall, like if we were to look at anything else, right? We're not seeing it go from, when it's trending, it's looking like this, right? Trending to the upside looks like that. Trending to the downside looks like this on the chart when you pull it up. But when you see a flat like this, right? Flat like this is range bound movement, right? So that's Amazon, right? Now let's take a look at Cisco. Now the reason I'm looking at Cisco is, remember when I looked at the chart, out of all these sectors here, it was the only green one. Look at this. And that stands out as to me, and that stands out as something that, there's something going on with Cisco, right? This whole sector, these whole sectors that are sort of related, they're all red, but Cisco is green. What gives? So if that doesn't show you that, hey, there's something going on with Cisco, we gotta see what the heck is happening, right? It's 2% up today, but Cisco usually is pretty stable, right? Right, you can see. So let's see what's going on with Cisco. Let me pull up some news too to see. All right. So good thing about TOS is you can get news, right? News right here. Let me link it. So Cisco news. Let's move this down here. Oh, it had earnings. Good earnings. Yeah, revenue up. All right, so good earnings. All right, so that's one thing that could make a stock go up, especially when everything's red, right? But we've been seeing, right? But don't count on it staying green, because what we've been seeing is a lot of big companies, good companies. Cisco is one. Cisco I would consider it as a good company. It's not a growth anymore. They hold still. They have good dividends, and they've been holding steady. I wouldn't consider them huge growth, but we've been noticing stuff like Apple, AMD, Nvidia, Amazon. They have good earnings, and after that initial pump of earnings, they go down to the downside again, right? A one with phenomenal earnings, MD, right? Earnings was back here. Look what earnings did to it, right? And it had great earnings. It blew like all of the estimates out of the water, right? Earnings was here, right? Earnings was here. It gapped up, stayed up for a few days, and then boom, it went back down, back to the normal trend again. So when we see something like that the whole sector was red, and we look at it, that's the reason why. It had a good earnings, but it's probably gonna go back to normal, right? Back to the normal trend that everything else is going to. You see, it even started here today, right? It went up big, but this candle is not, even though it's green, it's not a bullish candle, right? To me, it's not, because what is showing me is there's huge resistance at this level. People are selling off. People are getting rid of their shares right here at the 57 level, right? Goes to 57, gets sold off. Finish the day at 56, right? right? So tomorrow, I wouldn't be surprised if it just goes back down to here, right? So $3 down. But Cisco is not a stock that moves too crazy. You see, even if it goes down big, like it's going down to like 53. So $3 down. So you're not going to get too much. But with that knowledge, maybe you can get you can do a bearish call spread, right? A bearish call spread, so you get two strikes that are out here, right? So this is resistance, right? So 57 is resistance, so you know that that's resistance. And if there's any premium, you can get the 58, right? 59, you can get the 60. The further out you go, the safer you are, and you get a call credit spread, right? And as long as price doesn't go and touch it, or price just stays below it, you basically win, right? You can hold that for the next like month or the next 2 weeks, whatever makes whatever has more premium for you, right? So that's one way to play it, right? And it's not going to be a lot of profit, but it's going to add up, right? It's sure. It's a sure play, right? It's a play that has anywhere between 80 to 90% win, right? So if you could do that every 2 weeks, how many 2 weeks are there, right? You can probably do like 3 in this time right here. You might only net like $200, right? But that's 200 times 3, right? Times these 3 right here, $600. That's $600 that no one's given to you. You basically earn it. 80 to 90% win. That's pretty good, right? So that's one play, right? So that was from just us looking at the heat map and noticing that this stock is the only one green that's really green out of this whole sector, right? These group of sectors that's being this red, right? There's this one too. This one's up 1%, but it's such a tiny stock, right? These boxes represent how big they are in the S&P, right? The bigger the box, the bigger percentage it is. So you see they're tiny here. Market cap is probably, they're the smaller ones. But these are the green sectors today, or the sectors that were leading today in gains. But everything else is red. All right? That's one way you can play Cisco, right? And now let's take a look at Lockheed too. Because Lockheed was in the self-defense stocks. Like we're looking at stuff like BA, right? Self-defense here, BA, Lockheed, and I would even consider Breakdown, right, as self-defense. But Lockheed was the only one that was a little bit positive today, 0.5%, but still good. And it's kind of crazy. Look at this. It's the opposite of all the other stocks, right? This is in comparison, right? Let's bring up another chart. Let's bring a SPY for comparison, okay? SPY for comparison. And the reason we're doing this is so I can show you guys, in the bear market, not every stock goes up, but, right, so let me configure this, overlaps of value, right? So let me even add my studies. So we're showing two things, right? $5,200, okay. Ooh. Okay, show you the same thing, right? So we're just looking from just from the start of the year, right? January 1st, right here, to now. Lockheed has been in an uptrend, or it's going to the upside. The rest of the market, right? zooming into the dailies. Let me make these two go down so I can better show this. Right? In comparison, these two are doing the complete opposite of one another. Right? Lockheed, or however you want to call it, right? Since the beginning of the year, which is right here, it's been going up. Right? Since the beginning of the year here, SPY has been going down. So you see two disconnects here. At SPY, right? SPY, because SPY is going down, a lot of tech stock, right? Because they make a big portion of SPY. They're going down too, right? And you see this stock here going up to the upside, right? Something is going on with that stock, right? And if this one probably goes down a little bit more, my bet is this one's Lockheed is probably going to go up more, right? And so maybe it goes on a bull run, right? So not every stock is going to play according to SPY, but it goes to show you got to keep an eye out. Maybe there is something to play, right? So Lockheed, when everything was running the last like 2 years, Lockheed was just sort of hovering in there, right? So you see here the weekly, it was just sort of hovering, right? Playing. Maybe it's bull run time, right? Lockheed. Right? Especially where the threat of war is so eminent, right? Self-defense company, you see here, right? And maybe you get it right at, try to get it as close to the 50 as possible. Maybe if it comes back to 375, or if not, right? This is a new support here. Maybe this support right here is a good loading area, right? If it continues to the upside, and for the next 2 years, that's a great opportunity for you. Who knows where it could go, right? If it just goes back to its all-time highs, right? All-time highs, which it achieved back in 2020 before the drop. Its all-time highs was 442, right? So it spent 2 years just sort of in nowhere's land, right? And the people who missed it down here, right? Scary times for this stock, right? You can still catch it here, right? Because if it continues to the upside, right? Continues to the upside, it takes out 440. Who says it can't go any higher? Maybe it goes to 460. It's a stable stock, right? They pay a good dividend. They have some growth. The self-defense, right? Well, it's a small sector. So this section here, maybe we can relate it to this section here, right? Or this section here. So the point is, this is a good area, right? You may have missed the bottom, but I don't think it's anywhere close to the top here. And especially since it's doing the opposite, right? We're seeing it doing the opposite of SPY, right? Since the beginning of the year, SPY has been going down. This has been a stock that's been going up, right? It's not going up huge, but it's going up steadily, right? Keyword steady, right? Looking down at the hourly. Hourly is looking beautiful too. Look at this, 50 over the 200. Good, nice bullish signal. Look at that. Look how, and this is classified as uptrend. Look at this. Literally from the left lower corner to the right upper corner, right? So if you think that the bull run is going to continue, it's still perfect, right? Perfect time for a pickup. Look at this, right? It's sitting right here before another run, right? So let's zoom out. Let's zoom out so we can show you all the opportunities that you guys miss. All right. Boom. boom, 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 boom. All these bull runs, right? Depending on how you play for a day, right? You got some runs here. Play for a few days, few day swings. You got that stuff here, right? Look at that, right? So you gotta keep an eye out. This isn't bad, right? If this is another start to a run, right? It's sitting at we'll say 390 right now. 390, the high almost touched 400, so $10 up to the upside, right? It's pretty good gains. Maybe it's like 2-3 days trade, so $10 to the upside. Test all time highs, especially since your edge is that you've seen it. You've seen what the chart has done. You see what price action has done related to SPY, right? That's your edge. And you set a stop, right? You stop if you're wrong. So, stop, you could just stop it right here. And that's a pretty close stop, right? So it's 386, right? 386, and you're getting in at about 390, $4 risk for the upside potential of $10. Right. So that's the opportunity that you have. Right. This section was actually a little bit longer than normal. But I tried the 30 minutes, and I just got a little carried away today. But thank you everybody for joining me tonight. I hope that you guys picked up a few things, and this has been helpful for you. We've seen a few opportunities tonight. Cisco, Lockheed, the market overall, it's getting to a point where it's gonna pick a side. The pendant is getting tighter, right? The daily of the pendant is getting tighter. So be on the lookout for it, right? Be on the lookout for when a direction is picked. But with that, everybody stay safe and trade profitably. Remember, tomorrow is Friday, so whatever you do, don't put on unnecessary risk for the weekend. And with that, I'll see you guys next Tuesday evening. And I'm going to commit to my time of 10 p.m. Eastern. So hopefully everybody joins me. And if you have anything to add or anything for me to improve upon, please let me know in the comments here or reach out directly to me. With that, I'll end it here. Everybody have a great night. Stay safe. Bye-bye.